Hey, good morning. Today is Monday, January 19th, Martin Luther King Day. The markets are closed. So this is the market ahead review for this week, January 19th through January 23rd. As we're all aware, right now we have a bank holiday today, so nothing's open. The futures markets are open, and they did gap down right now. There's a bunch of stuff we'll go over today in the video. One thing, if you are new to the channel, please subscribe so you can get future notification. Also, hit that thumbs up button, like this video, and then also in the description down below, you can join our Discord channel for live trading when the markets are open Monday through Friday, 8:30 a.m. to 10 a.m. Central Time, where I go over some basic trade strategies along with some advanced strategies as well. Why I'm taking trades, where my stop entries are, my take profits, etc. But anyways, let's get into market data this week. Today, bank holidays, nothing happening here. Tomorrow, let's see what we have tomorrow before the market opens. I don't see anything too earth-shattering there. There may be something going on in with Governor Bailey speaking for the British pound there. That may move something there pre-market there, but we'll see there. On Wednesday, Trump is speaking at 7:30. That's interesting. We'll see what that's going to be about. Pending home sales at 9 o'clock. And let's see what else we have there. Construction spending. Thursday, we're going to get some PCE data and final GDP quarter over quarter. Unemployment claims. So there's some data coming out on Thursday. What else do we have here? Some October data coming out. So all this data is all, everything is catching up from the government shutdown. So we'll see how that comes into play. Let's see here. Friday, you're going to have flash manufacturing PMI and flash services at 8:45 after the market opens. So there should be a little movement there. You've got University of Michigan consumer sentiment revised at 9 o'clock. So those numbers are going to be, who knows what's going to happen there. So let's get into the futures markets here. So if you are paying close attention to it, we are gapping down. And for those of you that are kind of beginner traders, a gap down means that this is where we closed on Friday and we opened up with a big gap, right? So typically when trading is in session or even after session, it connects the dots from one candle to the next. We'll take a look here. This is a 15-minute candle. So you can see, when one candle closes, it just kind of connects and goes to the next candle and closes and connects, right? So when you have a close and then the market is shut down for the weekend and then it opens up and then it opens lower, that's considered a gap down from where it closed. You have gap downs, you have gap ups. So right now it created a gap down. I think there's a lot happening with Trump threatening tariffs on European countries if they're not backing him on this Greenland position that the United States is trying to take, that he is trying to take for the United States, that is. That combined with some other geopolitical stuff that's happening out there in the marketplace right now. You've got some things happening out in Iran. You've got a new Fed chair coming on. There's going to be midterms this year. So it's going to be a very rocky year. So I think we have to get used to the volatility, ups and downs, and really no good follow through that we like to have because there's still a lot of uncertainty with the marketplace right now. So let's take a look at the ES here. It's still a nice bullish pattern here. This gap down right now. Eventually that will fill. You never know when it is going to fill though. So that's always that $1 million question. When it could fill right now. So this is a day chart we're looking at here. But you can see it's still supporting this regressional trend line down here at this level here. This 68.71 is going to be a big level when the market opens up tomorrow. So let's just get lower here. So you can see that 68.71 level comes right in here with this weekly low from December 29th of last year, right down at 68.70. It is holding. Let's see what that low is there right now. It's holding that January 5th weekly low, 68.99.5 right now. So the market is open. If you're trading futures, you can trade futures. I don't trade futures. I did trade S&P futures in the early 90s, though. I was actually in the pit when they had hand signals, and back in the days when we rode our dinosaurs to work. So I was down there when we actually wrote our trades down on a card instead of everything being electronic. So those were interesting times, and then adapting to going to trading off the screen. So anyways, getting to our levels right now. I'd like this 69.99, 68.99.5 level to hold. I would not be surprised if we get a little resistance up here. If we pop up here, maybe a little lower than that. Let me move that one out of here. I would say if we did pop up here, that's 69.60.5. You may get a little resistance at that level. Maybe today, maybe tomorrow. As the market trades, we'll see what kind of volatility you have today. We'll see what kind of news and data happens throughout the day today. This gap fill very well may fill today before the market even opens tomorrow. So we'll see what happens there. But we do have some good support levels down here. If we did lose this 68, 66, 75 level, I like this 68, 14.5 level at September's highs of last year to hold support there. And if we lost that, you have another level down there at 67.71.5 for support there. If we lose that level, the next level support I have, unfortunately, is down there at 66.39.25. So in order for us to get higher, we're going to have to regain this 7,014, which was the previous all-time high that was hanging out since October of last year. Let me change that. I've got a little problem when I see something that's out of whack there, so I'll change that. So in order for us to to go and push higher and regain this, this is at 70.36.25. That is all-time highs right here, so I can mark that. But in order for us to get there, we have to regain that 7,014 level, and that was the previous all-time high set back in October. So we do need to hold this lower regressional trend line that we're hanging out at right now at 68, 66, 75. So I would not be surprised though if we do get a push up here into this gap down and then we reject. So we're going to have to see what happens. But if we do get the push and we do regain that 7,014 and then we make new highs at 7,036.25. I like our next level up there at 71,052.49. So that's on the upside up there if we do get that kind of push. So, but that's the way I feel about the ES. But I'll be able to go over more pre-market stuff tomorrow morning before the market opens then. So let's get into the NASDAQ. Same thing on the NASDAQ. NASDAQ gap down as well. This is I like this level right here. This January 8th low, 25,566.57. If we push into that level, I would anticipate to get a little reaction, resistance up there to push on the downside. We are below this lower regressional trend line that I have here, though, on the NASDAQ. So I would say that in order to push higher, we're going to have to regain this. We're looking at a 4-hour chart right now. If I break this down and look at a 15-minute right now, we're going to see how this responds right here. So you can see right now it's rejecting at that level. So if we reject at that level right now, we could come down here. We could test this high set back in September, 25,270.75 level again. And if we get that level down, if we don't hold that level, then the next level of support I have down below that is 25,125.25. And that's September 15th weekly high. If we lose that, there's another level of support down at 25,053 rather. And then below that, you have December lows at 24,887.75. On the upside, if you do regain this low from January 8th at 25,566.57. I think you could push into the upper end of the close from Friday, 25,700 before you get resistance. If you do get through that, I would anticipate getting a little resistance on the weekly high from set back in October, 25,815. This first level though here, this is the lower end of the regressional trend line. You must regain that in order for us to push higher. If we reject this today and even tomorrow, downside is still coming right now. Okay, so this is the first level. It must get above this. That's that first step right there. If you do get that, then we can push higher and maybe we can get some of this gap fill. And then if we can get the gap fill and push higher, then maybe we can get a push up into this midline of the regressional trend line. Set up there, I would say 25,928.65. So it's, the Mag 7 right now is really lagging. So everybody's just kind of like pulling off and going into the smaller caps right now. They're rediversifying their portfolios. Is the tech trade over for life? No. But, right now it's definitely in the penalty box. So you're just going to have to see how the market responds with all the news that are coming out, because with these new tariffs that are coming online, people are afraid on how it's going to impact their sales overseas. And I think there was something that happened over the weekend with China and NVIDIA. Even though NVIDIA got the okay to sell their chips overseas, I think there was something that happened in China with customs that put a stop to NVIDIA selling their chips for the time being, and I don't think that was resolved just yet. So that may be having a little impact on the market also. So there's a bunch of different geopolitical things that are happening right now that could be impacting the market right now. So I do like seeing a gap fill, though. It's something that you keep in mind. You keep it on here, and I always put my gap fills as orange. So it doesn't necessarily mean it's going to fill today, but you have it on the chart until you fill, and then you can start getting that direction towards that gap fill. So certain levels where you may get resistance. So this will probably become a resistance level until we can plow through it, and then it'll become a support level. So anyways, let's get into Tesla. Again, if you're new to the channel, please subscribe so you can get future notifications. And also hit that thumbs up button, like this video, and then go down into the description so you can join the Discord community to join us for live trading from 8:30 a.m. to 10 a.m. Central Time every day, Monday through Friday when the markets are open, of course. So let's go. Let's start with these point of control levels that we talk about all the time. So this was Friday, right here. Thursday's close was right here, and we created a point of control level that we were talking about. 442.43. I was speaking about it pre-market, and when the market opened, we hit this like a champ right out of the box. There was no hesitation. I made my money right away. I made my money, when we popped through it, and we got through that, and then we hit another point of control at 447.14. I sold short there, made money on the downside there too. So I made money both directions on Friday on basically on using my point of control level. So these point of control levels, if you're new to the channel, I leave these levels open, and they are automatically charted on my charts here. I have a script that it plots this yellow line, and it shows where the heavy volume is being traded, and it gives an average price. And then by the end of the day, it'll plot this yellow line. It'll show where that market price should be. Okay. So if the market closes, then I will plot this line. We'll put the line right here for an example, okay, even though it got filled. So if it got filled right here, so I would not have had this as the yellow line. So what happens, I'll have this as a level, and if the market, after market, post-market, pre-market, if it does not come back and touch this level of support, or if it's above the market resistance, I will leave this open. So it'll be an open point of control, okay? And point of control is where it's where the market is being controlled during that day, okay? So the reason why I did not have this open is because at this point of the post-market, it came down, Tesla, and it touched this level, so I would take it off of the of my charts. I would not have it, okay? So now this right here, if you look, even though it looked close, it did not fill. So I left that from January 13th, I left that point of control open. And so I left that open on my charts, and then on Friday, when we traded on Friday, we had 2 point of control levels open. This first point of control right here at 442.55, And then when we got through that, I still had this other one open here from January 13th. And we came up and we hit that one like a champ. And the market was really extended there for the first 15 minutes of trade. And I sold short there. I made a little money there. But if I had hung on to that, I could have been an absolute rock star with this, because it hit all kinds of levels that we had on here. Hit that point of control here on the high for 447.14. And then after that, the next 45 minutes, it came down here and it hit January 2nd's low at 435. So he had a nice $12 swing on Tesla on Friday. So Tesla was pretty volatile. I don't mind the volatility except on a Friday, because I trade options, and when you trade options and if you have that kind of volatility, and I trade Friday expirations, so your premium price is going to deplete pretty quickly on those Friday expirations. So let's get into that on how I monetize these levels here. So let's go into this right here. So the main thing we were talking about all week was this 50-day SMA on Tesla, right? So we are still, I'm going to go back to the broader markets as well and go over the SMA. So this 443.08, we were talking about it needed to hold above this 443.08 in order for Tesla to start moving higher again. I thought Friday was going to be it. We had a nice push to the upside, and then it just gave it all back with aggression. So Tesla right now, as much as I love Tesla and I'd love to be in that bull bias right now, I can't be a bull bias right now until we regain that 443.08. So right now with Tesla, my bias on Tesla is still any kind of pops you get, I'm looking to fade into the, any kind of pop, looking for a fade. So it's still looking like there's still sellers in Tesla, still keeping it down, because we're below the 50-day SMA. Excuse me, let me fix that. We're below the 50-day SMA at 443.08. We're below the 20-day SMA, which is up here at 455.49. Okay. Now I still have some open point of controls up here as well that I just went over down here. We have an open point of control of 455.09. That's back from January 5th. We also have a point of control up here at 478.35. That's from December of last year. So I'm going to leave that open as well. Not to mention I have a little gap fill up here too. So there's a lot of things on the upside for Tesla. It's pretty promising. So, I'm not a swing trader. I'm 100% cash in this account every day. So if you are a long-term trader, not a bad idea. If you want to think about certain areas where you want to take a position on on Tesla and set it and forget it and have your stops at certain levels if it doesn't work out. But I leave these levels in here for the intraday trading for when I come up to these levels, so I know where to get in my trades and get out of my trades. So anyways, let's go. I'm going to go right back to the broader markets real quick. So I want to put up those. I want to put up the SMAs on those also. So let's look right here. So here we are. This is a 50-day SMA on the ES. So we are above that. So that's still bullish for the ES right now. It's 68.94.69. So you want to hold that level. However, we are below the 20-day SMA at 69.52.75. So we're caught in this range here a little bit. And also, too, if you look at, even though we had this big gap down right now, let me go out here, go to the day. Let's clean this up. I mean, this is a really nice, clean pattern. I know there's some gaps and everything like that, but we're pretty much trading in this range here. It's a nice range here from 65.83 up to this 7,014. We're going to call that level right there. So it's trading at some nice levels. So you can trade these levels real nicely, like right now. So it's creating these, it's creating a higher high from here and a higher low from here, right? So here's a higher high from there, and right here is a higher low right there. So we could be creating a higher low right now and maybe pushing back up to make that higher high. So many different ways that you can make this trade here. So one thing that I just wanted to keep in mind here on these SMAs, we are in between the 50-day SMA right here and the 20-day SMA. So we're stuck in a range right here. So we'll be able to analyze this a little better tomorrow. Be pre-market. Let's take a look at the NASDAQ, see what that falls into play here. As far as the NASDAQ is concerned, we got the 100-day SMA that we are hanging around here right now. So we're below the 50 SMA on the NASDAQ, below the 20 SMA on the NASDAQ. So the NASDAQ has been getting hit a lot more than the ES. And why is that? Because there's the NASDAQ has 50% more is more technology index than the ES. The ES is only 30% technology. It has other stocks in that index to offset some of the technology downside right now. So that's why the NASDAQ is getting hit a lot more. But we are still holding this 100-day SMA. That'll be important to hold right now. Otherwise, if you lose that 100-day SMA, could have a lot more downside on the NASDAQ. So, but we'll be able to analyze that a lot better tomorrow. Anyways, let's go into the 5-minute opening range trade of what we do in the trading room. So again, if you're new to the channel, like this video, subscribe to the channel. So on Friday, the reason why we do the 5-minute opening range trade is because that's the first 5 minutes is when you get the heaviest volume of the day, right? The first 5 minutes and typically the last 5 minutes of the day, right? So you can see this is actually either the last 5 minutes or the first 5 minutes of the post market. You get the heaviest volume, and that pretty much dictates where the market may go on that day. So, but if you look on what we had here, so the first 5 minutes of the range on Friday was 439.19 for the low, 443.84 for the high. So when you broke that high, 443.84, and you on the next 5 minutes, you got 447.23. So you could have gotten about $4 out of that move. And so, basically on a Friday, 0DT, which 0 days till expiration, you could have gotten about $2 out of your premium. And I'll get to that in a second. And I'll show you how you would have been able to monetize that. But even, once you got up to these different levels, and then you hit that December 20th high, you rejected it. It also came in right at that point of control level that I had on that I just previously showed you. This is a beautiful, it's a beautiful trade with Tesla. I mean, I know, nobody likes a stock to go down, but you don't like a stock that has a lot of wicks either, right? So if you have that nice little consistent downward trade, that's a nice trade. You can make money doing that, right? So, and also following the levels. I did not change these levels. These levels were up there pre-market on Friday. You can go back and look at my pre-market analysis on Friday. I had these same levels up there. Same thing on the downside. I utilized these levels. When they came down here, I had confidence in my levels, where I was going to get in the trade. My first thing I go to is, where's my stop going to be, right? So you could have made money on the break on the upside. You could have made money on the break on the downside. So your range on the downside, your low end was 439.19. So if you sold it on the 439.19, you could have made another $4 on the downside. So there's all different ways that you can make money on this 5-minute opening range trade. So when I have this is another script that I have here, that when after the first 5 minutes, this green line is stationary. And not only is it stationary after that first 5 minutes, I can go back and I can look at any other day. It stays stationary on my previous days. So I can go back as far as I want, and I can see how this responds on these days. So you can see here, it broke the 5-minute opening range here, and you took it higher, right? So, and these are all things that I go over in the Discord channel if you come and you join the Discord community. So, but anyways, as far as this week is concerned, I am going to use 23rd. I'm gonna have to change this for tomorrow. So, 23rd, and I am going to start off tomorrow morning the 450 calls. And that premium closed at 315, and I will use the 330 puts. I'm going to change the expiration date to 23. So I always start out, and I always use Friday's expiration. So tomorrow morning is going to be the 20th, and the expiration date is going to be the 23rd, which is going to be Friday. And so the calls are up on the top. So if I think the market's going up, I usually buy calls. And if I think the market's going down, I'm buying puts. It's a very basic strategy that I teach here. I can do all complex trading as well. However, I found that for teaching purposes, if I keep it simple, simple is all you need. You don't need to have 20 different stocks up here to make consistent money. If you come into the trading room, I kind of go over what I've done. I set up a smaller type of trading account in December. of last year, December 1st, I started with 26,000, and on Friday I closed, and that account value was at a little under 57,000. So I share all those details in the trading room. So if you join the Discord community, you come on in there. I have no problem sharing what I'm doing, and all I do is trade Tesla options. You don't need to have 20 stocks up here to make money, and I trade pretty much 8:30 in the morning to 10 o'clock in the morning, sometimes later if I'm stuck and I'm having a bad trading day. But most of the time I'm done trading till about 10:30 every day. However, I do enjoy teaching, and my trading became better once I started teaching. So somebody told me a long time ago, a good trader becomes a great trader once they start teaching. So I don't know what I know until I start. So people start asking me questions. So that being said, please leave comments down below if there's other stocks you want me to go over, or that you have questions on what I am currently going over right now. So anyways, going over things, these are the premium prices. If you're new to options, if the premium price is at $3.15 and you bought a one lot, your cost on this one lot is going to cost you $315. So that would mean that your risk on this, you could buy one lot, you can walk away, you can go and get a workout. The worst that could possibly happen is you would only lose $315 on this trade. Now, something to keep in mind though, that being said, I have never, in all the years that I've been trading off the floor. I've been trading options now for about, say, about 7 years. I've never, not one time, traded an option and taken the premium price down to zero. It's never done at zero. Now, do I lose money on trades? 100% I do. Anybody that tells you that they trade and they never lose money is lying to you. I don't care who they are. I don't care what they're telling you. Everybody loses money on trades. I lose money on trades almost every single day, but I make money on trades as well. If I go back and I show you my TradeZilla account, I will show you every day that I make money. I very rarely am I making money on every single trade. There's always one or two losers in every day, and that's part of trading. And when you get comfortable with losing money on a trade is when you will become a successful trader, because losing on trades is all part of it. And if you can't get comfortable with losing money on a trade, don't do this profession, because it's all part of the whole system. You need to be comfortable with losing money on trades, because if you're not, and by the way, and I'm only speaking from experience, that I have lost. I had a huge ego with trading when I first started out, and I could never be wrong. And you only get into trouble with that. And the one thing that you learn is that if you exit your trades, there's another trade right around the corner if you're just patient and you step away. But the one thing is, when it comes to trading, big psychology factor, big psychology, more psychology in trading than anything. I could teach somebody their entries on where to enter a trade in probably 25 minutes. I could teach you, and your entries will be absolutely perfect in 25, 30 minutes every single time. The difference is there's more to it than just where your entries are going to be. Where is your stop going to be? Where is your take profit going to be? When am I going to get out of the trade? There's a whole bunch of variables here. So, and also, what kind of person are you? Are you okay? Are you a defensive person? Are you a gambler? You can't be a gambler when you're doing this, right? It's a business, and you have to treat it as such. But anyways, I could ramble on for hours on this. So again, if you're new to the channel, hit that subscribe button so you can get future videos, and hit that thumbs up button, like the video, share this video with people as I'm trying to build the community. And down in the description below, you can join the Discord community, and you can get further information from me in the Discord community at 8:30 a.m. to 10 a.m. Central Time every morning, Monday through Friday, when the markets are open. So that being said, I hope everybody has a great rest of their day, and I will see everybody tomorrow morning for the pre-market live at 7:30 a.m. Central Time. Have a great day, everybody, and talk to you soon. Bye.